Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and we are starting with a one-year daily candle chart of the Qs, ticker symbol QQQ. Then I'm going to go through the diamonds, followed by the spiders, the VIX, IWM, and I'm going to be looking at the Ethereum ETH and going over what's happened in the market this week. We've obviously broken out of this resistance high here on the Qs. And with that, I'm going to draw a horizontal line right to that high from back here in early September. And also point out that we have a small spinning top right there on a slight drop in volume after this long stretch of green known as a stale green light. Right there, we have, what is that, 7 green candles in a row. Today's the first red that's shown up after that. And it is a spinning top on slightly lower volume. Look at the oscillators down here, still crossing with sell signals, but most importantly, down at the bottom, we have a higher high in price, but we have lower highs still showing in the CCI with a hinge lower. Now, again, before you all start to shoot the messenger here, especially those who have been listening to me for any length of time, my long-term perspective on this market is that it's extremely overbought. I think it's gotten a little bit dangerous with the irrational exuberance, quoting Alan Greenspan from the late 90s, and that as a result of this excitement to the upside, I think risk management is needed now more than ever, especially as traders and investors work to protect any profits. Now let's go into the forecast. I'm going to be going over some slides that describe what a role reversal is about, and that is basically when a stock breaks out of resistance, it generally runs and then pulls back to the point at which it first broke out. And then that support level, this new support level, becomes a new area of buying opportunity. Now, don't be shocked here. I actually might start to take new long positions on that bounce. But until then, as an option trader, and a lot of our members have bullish and bearish spreads on, we're capturing profits from time decay at this particular point in time. But we're not going too hard directional to the upside. We have a balance, probably equal long versus short. But as I mentioned many times throughout the weeks on IWM, a breakout below 210, which we're further away from, but a breakout below 210 is when we would get out of all of our long positions and go completely delta neutral or short. Again, that's to be seen, and whether or not we'll break out, we'll have to wait and see whether or not that happens. But in the meantime, it's all about managing risk. Now, for next week, I'm going to call for another pullback, but the pullback is going to be to this breakout point. By the time that happens, this moving average will have moved up a little bit more, and we'll see that pullback and a possible new support level established at that level. So what I'm going to do is leave that horizontal line in place just like that, and then we're going to track it each and every week. Again, this is for the QQQs. We have some put spreads on that one, credit put spreads, and we also have butterflies and such for the option traders out there, and that is, again, for the Qs. Now, going to the diamonds, that's ticker symbol DIA. That's the ETF for the Dow Jones Industrial Average. Is pretty much going to be the same story. Looking at this, my forecast longer term is that that gap will fill. I'm leaving that in place. But as you can see right here, I'm drawing this role reversal right there from this previous high as a resistance. We broke out, bounced this week, and towards the end of last week, we bounced, and now we have what's known as an evening star. What's an evening star? It's when the market gaps up with a small little candle. It could also be a doji there, also known as a cross. It could look like that. Now, if on Monday we gap down, this becomes isolated at the top, and you can Google the pattern on that evening star. Just look up evening star, look at some of the images. That's an extremely bearish candle, and again, that's when risk management is needed, especially when you have profits to protect. Long positions where you haven't taken any profits on that, you definitely want to trail your stops up with that. So I am forecasting a pullback to this breakout point, which again will match that moving average. I'm just leaving that horizontal line in place, and then I'm going to give you some diagrams as to why this occurs most often. All right, it's very important that you understand role reversal, not just from a new entry point for new long positions or even short positions, but from a risk management point, it's extremely important that you at least know how to draw a horizontal line for a role reversal on the chart. All right, so SPY, ticker symbol SPY, it's the S&P 500, same story. I'm basically duplicating this throughout. We had a breakout of this particular high right there. I'm leaving that in place. Look at the role reversal. Former resistance broken here on higher volume, pulled back slightly. This is going to remain as a support level. And again, this is very close to an evening star up there. You see that? Very, very close. Spinning top. Oscillators turning down. Stochastics almost at a cross on the sell signal. Negative divergence on the CCI starting to hinge there. And so again, it's the same story. Possible pullback to that original breakout point where we'll have to see whether or not the markets hold as a new support level. By the way, again, to reiterate, these gaps are still longer-term targets for the option traders out there that are looking to do put spreads, especially diagonal put spreads. This would be your target area for ideal levels for those calendar spreads, especially, and for the option traders that know what I'm talking about, your short strikes will most likely be in this strike zone right here. So again, just helping the option traders out, adding a little bit more value to the weekly market report. Okay, so that's spiders. Now what's interesting is that the S&P was up today by a small fraction of a percentage, but check out the VIX. Now the VIX was also up. Now if you've listened to my market reports, you'll always hear me say the VIX, for the most part, is inversely related to the S&P. Why do I say for the most part? Because here's the example why. The S&P went up, VIX went up, but again, look at that pivot point. This is a very well-pronounced pivot point. I'm keeping this gap fill target on there, again, because I said 100% of the time, gaps fill on the VIX. Never said when, I just said they fill. If you look at history, you will see that is absolutely true. 100% of the VIX gaps fill over time because it's an oscillating index. It's not a stock that is trending. Notice down below, we have a cross over that momentum line. So that means for the next 2 to 4 days, on average, when you see that, the next 2 to 4 days, the price will continue in the direction of the cross. So again, in this case, it's crossing above, and we will see most likely at least a short-term test of this high, but ultimately we still have an open gap here, and we still have an open gap above the market. So for those of you that are trading the VIX on the long side, keep those target areas in mind. So again, we're moving rapidly through this. That brings us to IWM, where I'm going to take a little bit more time here because, again, this is a trading channel. I've taken the time to identify this channel. It's almost to the penny on the highs and almost to the penny on the lows of that channel. It's a textbook trading channel. Now, if you have heard me in the past talk about 210, that is why I talk about a breakout below 210, because that's going to be where we reverse our positions and go completely bearish or completely negative delta. We have a mixed bag right now where in a channel, as option traders, we're looking to capture time decay in this range right here. This becomes, again, our strike zone for collecting money in the market through premium decay. Right? I'm not going to get too far into the option strategy, but what does that mean for the trading channel? We still could see a little bit of upside. I'm not going to get crazy here and go bullish on you, but the way to measure the forecast on a breakout is you take the width of the channel and you connect that to the upside of the breakout point. So we still have a little bit of room on the upside that could be all the way up to 250, right, before we start to pull back. Now, I'm leaving this in place because ultimately I do believe that this is going to pull back. In fact, I'm going to keep the permanent lines on there as I draw the lines for you. Right here, I'll do that. Again, I think we could still go a little bit higher, but ultimately pulling back to this level where we'll have to see whether or not that tests as a support level. Again, that role reversal. Now, what am I talking about with role reversal? Here's what I presented to our members on Thursday. and explaining what causes a role reversal. When a breakout occurs, you have to understand that most of the time you have short-term, it could be day traders, short-term swing traders, are going to actually buy on the exact breakout. So they pump the volume up initially on the breakout. And a lot of times on a breakout, you'll see a gap higher in the market. In this instance, just as a textbook model of what a role reversal looks like, that's what's causing the breakout. It's the new buyers coming in, forcing the sellers to get away from this initial resistance point. The sellers now fade the market because they see the volume increasing on the breakout. And then what happens after that? It generally runs. It goes to the next point or the next higher level in this pattern as the buyers come in. You'll have the initial buyers coming in at this level. These are the people that are right on top of the market. You might have the swing traders participating at this point. And then as we get closer to the top here, we get what I call the procrastinators. These are the folks that are more or less the FOMO traders, the fear of missing out on the trade. They've waited too long, actually. They're buying in. But what happens is most of the time, again, shortly after they buy in, what happens? The initial buyers start to take their profits. You see the pattern here? 90% of the charts you look at, you will be able to find a role reversal pattern like this. Now, for some of you who were on the Thursday call with me, this might be a repeat of that performance, but this is where repetition becomes your best teacher. Now, as the pattern continues, those who got in on the original breakout are usually the first to get out, followed by, guess who? The rest of the market. Those will be the secondary buyers on the first round. And of course, the FOMO traders usually buy at the high and they start panicking and selling at the low. Now, once this selling on profit taking is exhausted, you'll start to see a drop in volume. So the volume bars will start to get lower and lower, at which point we generally see new buying coming in on the new bounce. Again, it's not a phenomenon. It is a common occurrence. It's a behavior pattern among traders. And this is why I say at that bounce on a new support level, I would consider taking in very small long positions only to trade a bounce, not to take long-term, buy and hold strategies. And I would most likely do that on an option trade. Now, again, this comes in. The new buyers come in when they see the drop in volume right there. Now let's take this concept of role reversal and now start to apply it to my last ticker, which is going to be ETHE, which is in Ethereum. Again, drawing this line here is the role reversal. See this former resistance right here was broken out. We saw a spike in volume as it was breaking out here. So the breakout occurs right here. And now we see the drop in volume. It's hard to see right there. Let me magnify that for you. Right there, you see the drop in volume is occurring at the top. That's when the initial buyers on the breakout point are starting to get out. They're reversing. But the overall buying by the average community of traders is starting to subside as this market now starts to form a pivot point. You'll then start to see the volume increase on the way down. Then the volume drops once again, and you generally see bounces right there. As a crypto trader, I'm not going to say this is going to be the case for all cryptocurrencies, tokens, or Bitcoin products. However, I'm going to draw this as a role reversal line right there for you. And notice one of the most important things is that this resistance top here, once broken, correlates very nicely with this moving average, which again will act as a secondary support level. On the downside, let's talk a little bit about risk management. What happens if this does not bounce here, or it does not bounce on any of the other markets I've mentioned? Well, guess what? The selling will accelerate, at which point we'll have to look for another support level. It might even be another role reversal level. It might even be down here. We see this resistance here once broken. So if we break below this support level here, that might bring us to S2, secondary support level down here, at which time we would most likely look for a bounce. But again, my long-term view, just to keep it on the record, long-term, extremely bearish, keeping my eye on the charts. All right, don't shoot the messenger, just like you wouldn't shoot the weatherman if he says it's going to rain and all of a sudden the sun pops out behind the cloud. Don't shoot the weatherman either. All right, just look at the charts, manage your risk, keep your eyes on the technical signals, and trade in moderation, and make sure that you, again, trailing your stop up if you're long. So you have a great weekend, and we'll talk to you soon. So long.